QuickBooks Pro Desktop 2021. Pay bills form, check. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the home page open. You can open the home page by going to the company dropdown and home page. We also have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list, making sure that you have this portion extended so that you can see the open windows. We're now going to be moving on within the vendor section, taking a look at the second major form, that being the pay bills form. So last time we took a look at the enter the bills. Now we're going to be doing the pay bills. Note, we're not actually going to be paying a bill at this time, but looking at bills that have already been paid. If you want to go through the process of entering the bills, take a look at the second half of the course when we do the data input, and we'll actually do the enter bills and then the pay bills at that point. Right here, we're focusing in on the navigation process. So as always, we want to think about how this is going to fit within the flow, vendor flow, customer flow, employee flow. Then what form do we want to use? If they fit into a flow, what form do we want to use? And then we want to analyze when we use that form, what's going to be the impact on the financial statements. And remember, if you have an accounting background, you typically want to default to using a form as opposed to jumping to a journal entry. There are times that you might want to jump to a register or something like that to enter the data a little bit faster, but you typically will want to be using some type of form as opposed to debits and credits, because the forms are built into the system and built into to working with the system. For example, of course, the bills form is tied to the accounts payable. The accounts payable is tied to the subsidiary ledger, which is going to track who we owe by vendor. And so you want to make sure that you have everything tied together. And that's why you have to use, you got to use the forms, which will then create the journal entries. It can be a little bit frustrating because you don't actually see the journal entries. You'd like to actually see the journal entry, and the forms don't actually show you the accounts that are affected, but that's what you need to understand, whether you have an accounting background or not. We want to know what the effect is on the financials. So when we entered the bill, we know what that did. It increased the accounts payable, and then the other side is going to go to whatever account it needs to go to, oftentimes an expense account for normal type of bills, such as the phone bill or the utilities bill, and then to like inventory accounts if we're purchasing something such as inventory. So now we're going to pay the bill. When we pay the bill, we're going to be paying basically with a check type form. Now remember, when you're thinking about a check type form, you see the check type form down here. Note that the check type form doesn't just mean that we only use it for checks. This form is the form that basically means the checking account will be decreasing. So even if we had an electronic payment or something like that, QuickBooks will still basically use a check type form. And notice when you use a check type form, if you were just to write the check directly instead of entering the bill, and you were just writing checks or decreasing the checking account, you can use the register. That's when you can basically use the register, a good time to do so. But even when doing so, if you enter this directly into the register, it'll still create basically a check form as you enter it into the register. So when you drill down on the data, you'll still see a check form. Now then the question is, well, what's the difference between a check form down here and this bill pay up here if they're both items that are basically doing the same thing as a check, meaning they're going to be decreasing the checking account? The bill pay form will show up in the data, the transaction data, basically looking exactly like a check and doing the same thing the check does, but it will indicate that it's a bill pay, and that'll tell you that, look, this is only going to be decreasing accounts payable. If it's a bill pay type check, then it's not going to any expense account. This is paying down the accounts payable. That's useful to know because if you want to know what you're actually paying for, you can't get it directly from the payment of the check here. You have to tie it to the bill because the bill is the thing that ties out which account you actually are paying for. Meaning, is it the phone bill, is utility bill, and whatnot? That's been entered here in the bill side. So that means that it's useful to know what the checks are that are paying off the accounts payable so that you can then find the bill if you want to go back to the audit trail and see which account you actually hit when entering the bill. So once you enter the bills on this side, then you're going to go to this side and basically sort them and pay them. So remember, the bills are going to increase the accounts payable, It's useful to enter the bills because that will be closer to the point in time that you actually incurred the expense, oftentimes, such as the phone bill or utility bill being incurred closer to the time you receive the bill. If you enter the bill into the system, then you can use the system to then wait as long as you can to pay the bill, which is standard cash management strategy, using this item, sorting your bills by when the due date is, using this item over here. Or you can sort using the vendor center. You can look at it in the vendor center or take a look at the reports for the vendors that you owe. And those are different ways you can sort the bills that you owe. But typically people will then go into the pay bills here, and you've got this nice little screen. We don't have a lot of activity going on here, but you can imagine if we had a whole bunch of bills that were due at this point in time, they would be listed here. We could say, I want to sort the bills by the due on or before date. And so we can sort them before this date or show all bills. If you have a lot of bills, it's nice to have the filters. We also have a filtering option here, sort by the vendor item that we can be sorting by, or sort by these items, which are due date, discount date, vendor, amount due, and so on and so forth. So you can sort what is due. Obviously, the most common sorting would be sorting by date, when the date is due, and possibly by vendor, taking care of your most valued vendors first and keeping them happy. And then you can select the bills down here. You can select all the bills at once if you choose to do so this way, and then pay them at one point in time. I'm going to deselect them. And then if you wanted to select a particular bill like so, and then go to the bill, check out the bill, then you can use the go to bill, and this will actually link to the bill. So this bill over here is creating that line item on the pay bills screen. Closing this back out, I'm going to uncheck this off. Then we have the items for the discount and the number of credits, total credit available if applicable. Then we have the payment date. This is going to be the date that we're going to make the payment. If it's a check, the date of the check. If it's an electronic transfer or something other than a check, again, the check form, it's going to be the form that will be used to decrease the checking account. So this is going to be a check form, bill check type form. So then if it is a check that we're going to be using, we have the check or the credit card. Again, we're going to choose the check for any kind of standard type of payment, even if basically it's not a check, because that's going to be the form that decreases the checking account. If we're actually writing checks, then we might actually have checks that we're going to be printing out of QuickBooks. Now, if you have checks you're going to be printing out of QuickBooks to manually write, to actually make the checks and send them out, send out the physical check, then you would need to buy the checks basically from the bank, because they need to be pre-numbered. You can't just print a check on a blank piece of paper. So you'd still have to buy the check. They would be pre-numbered, and then you can go to printing the checks up top. You can enter those checks in the right format into your printer and then print the checks in order, and they should then print out and be ready to send out. That's another reason that this bill pay is kind of nice, because it's kind of a nice system if you are printing the checks, that you can check them all out and then print them all out of this kind of system at one point in time. If you are writing the checks manually, possibly you don't have a lot of manual checks, you don't have a lot of checks that you actually send out, you might just have a checkbook and you write the check in your checkbook, and then you assign the check number here. And so when you pay it here, you will simply assign the check number that will match your checkbook, and that's how you can do that. If you're doing some other type of payment, like an electronic payment, but you're just entering it into the system, so it's a decrease to the checking account, but it's actually an electronic check or some other form of payment that decreases the checking account, then you would assign something other than the check number, because it's not an actual check, right? So then you can use this and assign something other basically than the check number. Then when you process these, it will then, generate the transactions, which could include multiple checks at one point in time, multiple checks, which would all be decreased in the checking account for the amounts that would be indicated up top, the other side decreasing all of them, the accounts payable, because all of them are running through the accounts payable account. So let's see what would happen. That's going to be the transaction here that would happen. This form, this screen means that when you put a transaction here, accounts payable is decreasing and the other side is going to cash. It's going to be decreasing cash. So if I close this back out, let's open up our reports again, go into the reports drop down, company and financial. Now these are not just reports, these are our major financial statement reports, the balance sheet and the profit and loss or income statement. So I'm going to go company and financial and then balance sheet. And then I'm going to use the date range so that I can use the zoom feature, changing the dates from 01/01/21 to 12/31/21, January through December 2021, and OK. So there we have it. Now, when we pay the bills, if I double click on the checking account will be decreasing. So if I do this now, if I look in the checking account line, there's a lot of activity happening in the checking account because cash has the most kind of stuff that's going to it, the most types of forms, whereas other kind of accounts are limited to the number of forms that will be included through the flow of that particular account. So it's really nice that they have this type here to tell us what kind of things that are happening. So we have this check here, which is an actual check that is being written, but it's a bill payment check, as opposed to this check, which is a non-bill payment check. If we look at the difference between the two, let's first look at the normal check here. If I just click on this normal check, which is paying the phone bill directly, this is not going through accounts payable. Looks like a check very similar to the bill that we entered, except it's a check, meaning instead of increasing the liability account of accounts payable, it's decreasing the cash or checking account. The other side here is going directly to the expense. So if I close that back out, this bottom half is what will look different when I go to the bill pay check. If I go to the bill payment check, then we see that it's still coming out of the checking account, still looks like a check, but the bottom half doesn't have that account item down here because all of these bottom components are now going to be paying off the accounts payable. The other side is accounts payable. What we want to know from this bottom component is the bill that is being paid off, so that if I wanted to check the audit trail and see which account was affected from that bill, I'd have to go to the bill and basically check that off. So it's still basically a check type form. Again, remember that this check form could be a check, an actual check where it would have a check number as this one does, or if it was just a payment of an electronic transfer, you wouldn't have a number here, or possibly put something other than that, like an e-transfer form, like just to indicate that it was an electronic transfer. This form is the indication form that the checking account is decreasing. So I'm going to close this back out. So that's going to be the cash side. The other side, of course, would be in accounts payable always. So I'm going to close this back out. The other side's going to be on the balance sheet. No effect to the income statement here. It's going to be on the balance sheet. When was the income statement affected? When we entered the bill. The expense was recorded to the income statement when entered, not when paid. The accounts payable is an accrual type of an account. You're using an accrual basis when using accounts payable. So then I'm going to be, which is a deviation from a cash basis. So I'm going to then go to this item. Now, again, all you'll see in this account are bills, which will increase it, and payments of bills. Unlike the cash account, which you had all kinds of things happen in there, because cash is involved in every flow. You know, the customer flow, the payable flow, and employee flow. They're all involved in the cash. But accounts payable only includes bills and payments of bills. So the bill was something that was going to increase the accounts payable, such as this one, and then the payment of the bill will pay it off. And so you should be able to see this pattern where you can kind of tick and tie these items off. And so if I double click on the bill payment, then there's the other side of the transaction. Once again, we're back to our check, but it's a bill payment type check indicated by that bottom portion showing you the bill that is being paid off. Closing this back out. You also want to check these out with the trial balance. Going to the reports drop down, accounting and taxes, trial balance, changing the date up top from 01/01/21 to 12/31/21. Now, both of these items are balance sheet accounts, so you can see them on the balance sheet. We didn't even really need the income statement. But again, the trial balance is where you can go and you can have these in a tighter component, tighter space, so you can go into them more quickly. So I can say, all right, if I entered a bill, I can check it out on the checking account, double click it on the checking account, and I'm going to say, okay, here's a pay billment, a pay bill, which a pay billment, which was $15,000 here. Let's do a different one. Let's say a pay bill down here in the 28th for Verizon. So Verizon $365. The other side you can see in the splits here, and the splits going to accounts payable, which we already knew because it's a bill payment form, and that means it's going to go to the accounts payable. So $365 going to the accounts payable. Double clicking here, the other side's going to be, there it is, $365. There's the bill payment on the other side. 2 accounts affected at least with every transaction. Each of the forms on the homepage generally making some type of transaction affecting at least 2 accounts. So then I'm going to be closing this back out. Now this account's payable. We can also see the subledger here, because when we pay off the bill payment, we also are decreasing the accounts payable, and therefore also need to know which vendor is going down, which we could find by going to the reports up top. we can go to the vendors and payables and the vendor balance detail, changing the dates from changing the dates up top from 01/01/21 to 12/31/21. Same ending amount, that's 648. And then we can see basically the bill payments. Here's a bill payment here, and here's the bill payment for Verizon. So this is a nice way that we can track, you know, what we have incurred in terms of bills and the payments. And again, you should see some nice pattern here, which should say, here's the bill that increased, and here's the payment that decreased. And it goes back down to zero. That's what should happen like all the time. That should be it, you know, for all of these types of, for all of these sections or all of these vendors. You can also, of course, see the vendor detail by going to the vendor drop down and the vendor center, which will give you your breakout of your vendors on the left-hand side and your vendor information on the right-hand side. Notice again, if you go to the transaction tab, then you're going to see some items, the bills here and the bill payments that you could sort in that fashion as well to see that information.